In this video, I'm going to talk about what's the difference between a stop entry and a stop loss. They're both stop orders, but what's the difference? Stay tuned. Hey traders, a very warm welcome to you. Okay, let me bring up a chart of something other than currencies for the guys out there who don't trade currencies. I know a lot of you do trade currencies, but let's keep it mix and match. All right, we've got gold up here, daily chart on gold. Let's clear out some of this stuff. Let's talk about the difference between a stop loss and a stop entry. Now, a stop order, what is a stop order? Let's clarify that first. A stop order basically is an order that you put with your broker that says, hey, if the price of the underlying, in this example we've got gold, if gold, and let's use an example here, let's go with 1320. All right, keep that number in your mind, and I'm going to write it on here for now. So 1320. So a stop order, a buy stop, if the price at the moment is down here, let's assume we're looking at the price here, forget about all this on this side, let's say we're looking at the price here. If we put a buy stop at 1320, we are basically saying to our broker, hey, Mr. Broker, Mrs. Broker, when the price of gold gets to 1320, I want to buy whatever it may be, £50 a point, 50 contracts, 1 contract, 2 contract, whatever. Those are instructions that you place within your ticket. And the stop says, yeah, okay. And then the broker says, fine, I'll leave that. It's a pen, goes in my pending orders blotter. So when the price of gold gets to 1320, I will buy your £50 a point. I'm just going to use that example as a spread bet, but obviously for CFD it will be CFDs, and for contract it'll be different. But just to keep it clear in my head as we're talking to you guys, that's what I'm going to say. So £50 a point, we're buying long 1320. Now, when does it become a stop entry and when does it become a stop loss? Now, it becomes the standard thing for doing that, standard time for putting a stop order in is to limit your loss. Okay, that's why it's called a stop. But to limit your loss, you would have to be short already for that. Okay, so let's say you went short at, let's say you went short at 1300 here. Right, and you had a stop at 1320, so you'd have a buy stop, as we said, £50 a point. You're already short £50 a point from 1300. You're hoping the market's going to go lower. It doesn't. It pushes up to highs. It pushes up to that 1320. Your stop loss order is triggered. It buys 50. And of course, what are you doing by buying 50? You're covering that short position because you're already net short 50, and buying them back gives you a net of 0. So you're crystallizing that loss that you've got, that $20 loss multiplied by whatever your position size may be. That's a stop loss. However, what is a stop entry? When would you use it and what's the point of it? So a stop entry would be a fresh order that if we aren't already short. So we're not short and we want to say, hey, do you know what? I now want to buy. It's exactly the same order. It's saying, listen, when we get to 1320, please buy me £50 a point. But because we're not already short, that's going to make us net long. So in other words, this is a kind of order we would use to get into the market if we're looking for a breakout strategy, if we're looking to follow the momentum of the market. So our analysis would be, hey, you know what? We think that if the price breaks above 1320, this level here, that it's going to push on and go even higher. We're not in a position already, but we don't want to buy it yet because we think that maybe 1300 is a bit of a resistance level, but we think if it goes through 1320, we want to be on board because it's going to push higher. So we would put a stop order in, but it would be a stop entry order for the same size, same price, same exact thing. And the result of that is, of course, as we trade through that 1320, it fires off the buy stop and makes us net long because we weren't already short, we had nothing already. It fires off the buy, exactly the same thing, buys us those 50, goes in as our open position as plus 50. So now we're long £50 a point, 50 contracts, whatever it may be, 50 CFDs from that 1320. So that's the distinct difference, guys. It's exactly the same order that's being executed, but if there's no order, if you haven't got a position kind of before the order is executed, it's just going to be net. You know, your net plus 50. If you already have minus 50, of course, it's going to be crystallizing a loss. But if you haven't got a position and it gets activated, it's going to make you long net 50. And as I say, the idea of that is that you're not you're trading a kind of a breakout type strategy, an expansion type strategy. You want to follow the momentum. The flip side of that, or the opposite with that, would be to have a sell limit at 13.20 for £50 a point, 50 contracts, whatever it may be, and that would be when the price hits that level that you're going short. So there's two distinct different things, but again, they're kind of pending orders that get you into the market. So that's the difference between the stop loss and the stop entry order. And be careful on your platform of how you place it, and make sure that you know that you're using the right kind of thing depending on the platform. You're using the right ticket and all that kind of stuff. Just double check when you're doing those orders. So handy little order to do, very, very useful if there's something specific you want to get involved in, but only after it's kind of shown strength or shown weakness. Anyway guys, take care, good trading, see you in the next one, bye bye.